Good afternoon. Afternoon, everyone, and welcome to this, or my first stream on YouTube, doing my my YouTube. Again, if there's any issues with audio or anything like that, please let me know, so you can hear me well. I'm not, again, this is my first time doing it, so hopefully I come through okay. Again, if there's any issue, yeah, I was just testing my sound, excuse me. So yeah, this is the first part in the series of my $200,000 FTMO funded account. So I kind of want to do a YouTube series on this, just go through it live, see my process to see if, there's no guarantees I'm going to pass it. There's no guarantees, I might fail it, but I might get a free repeat. And with these FTMOs, I'm sure some of you out there have probably done them, or any kind of funded account challenges. They're quite difficult in the initial stages, certainly for the FTMO, where you require to get 10% return in 30 days, which if you are a full-time trader, you need a kind of good month to do that. Normally, I would say my average return is around 3% per month. That's what I aim for every month. It kind of keeps my realities in check. It makes, I don't put too much pressure on myself to make 10% plus per month, because the reality is it's not going to happen. Now, as we know as traders, the more equity you have, the more money you can make, because it's not a get rich quick scheme, which unfortunately I think is portrayed on social media. I probably won't say my full thoughts on that, maybe in another video, where you can make all this money so quickly. That's just not the realities of what trading is. You're looking to make consistent returns of a couple of percent per month and compound those returns into what happens to be, a good end of the month passive income. So if you have $1,000 account, if you're looking to get maybe 3 to 5% per month, that's $30 to $50. Is that really going to be worth the effort of scanning the markets every day, looking at the markets a few times a day, etc. like that? I don't think it is. And this is why I always say to, the RTFX members and stuff like that, that don't waste your time if you can't afford to put at least $50,000 into a trading account, because the returns are not going to be worth the effort. What you're better to do is save that money, learn how to trade firstly, because I think a big problem is if you can only afford to put $1,000 into an account, a lot of people are trying to make too much money on that, so they're over risking, and that ultimately leads to blown accounts. I know I've done it many times in the past, and I actually think that's probably a rite of passage for new traders, is to blow accounts. I don't know any traders that haven't blown an account, or full-time traders that haven't blown an account. It's just seems to be what you have to do in order to progress through all those stages of being a trader, developing your strategy, psychology, etc., in order to get to that stage where you're consistently profitable. Now, that if you are a person that can only afford to put $1,000 into account, my message is that $1,000 could be worth $200,000 in funded equity. The FTMO challenge, this 200 grand challenge, cost me $1,200, I think it was. So let's say just over $1,000. But you can get, for $700, I think it is, you can get the $100,000 funded account challenge. So where your couple of percent per month is actually worth the effort, your return or your profit per month when you are a consistent trader is worth it. So why would you use that $1,000, put it into a trading account and earn $30 or $50 when you can get $100,000, $200,000 where you're earning $2,000 to $5,000? And on the big months, for example, the month that I'm having right now, not on this funded challenge because I've just started it. This is my first trade. That's why I'm doing the first video. The big month right now, I'm sitting on 9%. 9% of $200,000 is $18,000. You don't keep all of that, remember. You keep 70% of it, because FTMO or any probably funded trader program takes a cut. That's really how they make their money. So yeah, I wanted to go through this. I'm not going to do like hour-long videos, probably quite quick videos on the trades I'm doing, what I'm looking at the market, how my account's going, and hopefully at the end of it, I will pass it. Now that's a hopefully. It's not a given. I don't know what's going to happen in the future. But let's see. So I'm just trying to be transparent with everyone on what real trading is like. So this is my first trade on this account, this Swiss yen trade. And the reason why I took it is, I'll go into kind of my market analysis for the day ahead and what I'm looking at after. But for this trade here, it was a 4-hour chart trade. So I trade the breakouts on the 4-hour and the daily, and I trade the breakout retest from the 30-minute, 1-hour, 4-hour, and daily. I don't trade the breakouts on the lower time frames. I found that I'm susceptible to a lot of fake outs, we say. So the market kind of, for example, if it comes up to this area, this is a 30-minute chart, a lot of the times those fake outs happen and you end up getting stopped out and it's a losing trade. So I don't trade the breakouts. Purely on my back testing, I found that they didn't work or weren't as profitable as trading them on the 4-hour and daily, where you can get larger stops, allow for that short-term volatility where you're still in that trade, as long as you're going with the trend the majority of the time. I'm majority a trend continuation trader. Then you're likely to see decent results. So this Swiss yen was a breakout trade that I took on account of one of the contexts I like is a cup with handle. So this had a cup and a wedging structure as part of its handle. My buy stop was taken in here. I actually didn't want this bar to happen. I didn't really want it to have quite a strong move as it did. I know that sounds very strange. The move came here. So it looked a bit climactic to me. But again, that's just something that happens with trading. So I took my buy stop here. I would have preferred, on account of breaks of this level, this area here, I would have preferred this market to have come up to the area, tagged the area, and had another reload before it did decide to break, just making that a bit healthier. Because with moves like this, climactic moves, they are susceptible to a kind of snap back or a V reversal, as sometimes you can call it. Like an elastic band that you've pulled too hard, snaps back, and unfortunately takes you out. So we try to avoid them. However, on the 4-hour chart, it was enough for me to take that trade. We had a nice wedging structure in here, a good bit of accumulation prior to the break at a level, which I like to see. I saw that 20 period, so I use a simple 20 and a simple 200 moving average along with volume. Those are the only indicators that I have in my chart. I'm primarily or purely a price action trader. And I saw a big bullish bar, an outside bullish engulfer here. We had a Morningstar pattern on that 20 period. Tagged that area again. 2 bars of a nice kind of reload. Another good rejection of that 20. Good bullish bar. Inside bar, and then a good break. So the 4-hour looked good. The 4-hour looked nice. And we were triggered in. Our stop was underneath here. Now on this what FTMO call a demo account, I had this big spike on open, but actually that's not actually, if you look at the real chart, that's not actually what happened. The spike was only down here, so I'm not really sure why that happened. But anyway, I was still in the trade. I looked at it on Monday morning and thought, oh no, I hope I'm not out of it. But then I looked at my real account. I've got a real $100,000 funded, and I was still in the trade as well. So we've broken out, and again, I didn't mind this price action because my favorite pattern, my favorite retest was the ABC, and that's what we kind of got here. If you can see, A leg, B wave, down to C wave, and this C was a nice rejection of old resistance potentially becoming new support. And I thought at that point in time this might move forward. I haven't checked the charts for a little bit of time, but when I just opened it now, it seemed, at this point in time in the 30-minute. Now, again, this is a little niche of mine. I use a 30-minute chart rather than the 15-minute. I know 15-minute is quite popular, but I use a 30-minute just because I think I resonate with it. It gives me good results on the breakout retest, and I kind of like it. I like the chart. So I saw this and I thought, okay, this is going to motor on, and then we got a complete rejection here, and the yen seems to, which the yen has had quite a bit of weakness over the past couple of months. We got this big rejection bar here, so it doesn't seem to be ready to go, and it's kind of shifted the momentum of the trade on the shorter term time frames. Now I still have this 30-minute 200 and this 1 hour 200 underneath my stop, which is known as dynamic support to price. So you certainly have a support area on these moving averages, certainly the 1 hour. That still pushes price up. So I've got barriers there to protect my trade from its stop. And still, if it's a 4-hour chart, so you primarily have to look at this trading time frame. It still looks good. The area is still not broken. So although this, looking at the smaller time frames, you might be worried about this. If we look at the trading time frame, it doesn't really look as severe as it does on the smaller ones. So maybe we're getting another leg. Possibly we can come down to touch this trend line. Now there's only a few touches there, so I would consider it a tentative trend line. So trend lines I would consider 2 touches to be tentative, 3 touches to be valid. But it's not something I really use in my trading, to be honest. So we could come down and touch that trend line. Obviously we've got that simple 20 here as support to price, along with this resistance area, which has or support area now, should I say, which has been respected for a few times. So maybe we end up testing it again and then moving on upwards. So the Swiss yen, I still like it. Obviously I would have preferred if this pushed up right now, but I've done my analysis, I'm in the trade, and I can't tinker with it. Before, when I was learning, I would maybe get scared at this point in time, take the trade out, and I don't know about you, but how many times have you seen this kind of, if you've taken it out, it might come down and then end up going in the direction you thought. And at the end of the day, it's on an uptrend on the daily. The daily looks healthy. There's no real extensions there. So for me, if this ends up being a losing trade, then it's just a losing trade, and I move on to the next one. It's just as I said, my first trade that I've taken on this 200 grand funded. So that's the Swiss yen, and we'll keep an update on that over the coming weeks. You do get 5 trading weeks to complete the 10%, so there's a long time for me to, even if this does lose, get the loss back, should I say. And you're always going to take losses as a trader. There's no trader in the world that has a 100% success rate, and if you hear anyone that does, or you see anything online that says they've got 99% success, they're basically full of it. So I wouldn't believe it. It sounds too good to be true. It probably is. But this is another good thing about wanting to do that, is that for people who may be learning how to trade, just to see how full-time traders do go about their business, because they do take losses. And if this ends up being a loss, then it ends up being the loss. And you have to, just move on and confident in your ability, that you've back tested, that you can pick winners consistently out the market. And when you pick winners, they end up making more money than the losers do, or you're able to pick more winners than losers. So this month, and I don't know if this is the same for anyone else who's done the FTMO, but it seems to be, as soon as I start the FTMO challenge, I'm not saying this is going to be a loser, but it seems to be the first trade always loses. And I don't know why it is. It's nothing to do with psychology, because I'm not forcing trades. I'm waiting for the right trade to come. If I purchase a funded account, I don't start on that day. I wait for the right setup. So it could be a week later that I start, as long as the trade comes. But I always seem to get off on a losing start. I don't really understand why. And typically I did this, so this is my free repeat. I don't know if you know, but if you pass all the requirements, so minimum or maximum of $5,000 per month you can lose, maximum loss of 10%, which is, this is on 200 it's 20,000, so maximum loss of 5% a day. You can't lose more than that, or else you automatically fail. You can't lose 20,000, so 10% or less, you automatically fail. But if you pass all those requirements and you don't quite make the percentage return, so you don't quite make 10%, but you make maybe 2 or 3%, you get a free repeat the next month. So I always go into an FTMO or any kind of funded with the aim of getting a free repeat. Again, 10% is difficult for traders. You have to have a good month to have it. You might have to wait 3 or 4 months. On my 100 grand, I had to wait 4 months before I passed that initial challenge. And then the verification stage, you have to make 5% over 2 months. So it makes it a little bit easier. And that's when you prove to your funded application that you are indeed a profitable trader. Now as I start, I go into a bit of a market analysis on what I'm seeing and what I'm looking at in the market today. With this SPX is where I always start, the SPX and the dollar, because that defines my risk sentiment. As you can see in the top right hand corner there, my risk sentiment today, I've got corrective / slight risk on. And what I mean by that, if you don't know risk sentiment, risk on is when stocks are pushing. So the SPX is moving up, things are good in the world, people are confident, people are buying stocks. And normally during those times, in terms of Forex, you see the commodity currencies being bid. So your Aussie dollar, New Zealand dollar, and your Canadian, because they're commodity economies. In times of risk off, so when stocks are falling, possibly due to whatever right now recently has been inflation worries before COVID, etc. You see risk off currencies being bid, so your Japanese yen, your Swiss franc. Now the US dollar is a bit different because pre-COVID, if stocks were pushing, the US dollar would rise in value or gain strength. Post-COVID or during COVID now, it seems the US dollar is acting more as a safe haven asset, whereas the stocks are falling, you're getting that possible flight to cash where people are selling stocks. What do they have to do to sell stocks? They've got to buy US dollar, which means the US dollar has been rising in value. Recently, over the past week or two, the dollar has been very weak. However, this SPX, as I talked about on a stream I did on Monday with Trader Nick on A1 Trading Team, follow them. Trader Nick's great. Very good content, a lot of good information from them. I don't like the SPX at the moment. I don't like where it is. It's very uncertain. As a price action trader, I can't really make sense of this. If we look at previous correctives, here, and here, they just look a bit nicer than what we're getting at the moment. So we're kind of in no man's land. What I would like to happen is, this is a daily chart. For this daily chart to come and tag these all-time highs about the 42.30 level. Again, I don't focus on particular price points. I focus on areas, which I've aligned by this orange resistance zone. I would prefer this SPX to come and touch this level and possibly give us another reload before breaking through. I wouldn't want, because of the price action, I wouldn't want this to go and break through, because I would figure that might be susceptible to a drastic move down. And, I'm purely a technical trader. So I don't have, firstly, I'm not smart enough to have a fundamental bias. Right? I didn't go to Oxford or Cambridge or Harvard across the pond, etc. I'm not smart enough to be able to analyze all the data that's coming out of certain economies and have my view on it and trade that way. I find it easier to look what I'm having on the charts. Like I said, I don't have a fundamental bias, and make my decision from that. And it found out that it worked better, that I'm more profitable that way, because I take all the information away and I just focus on what I'm good at. And that's reading candles, reading price action. Because you got to remember, within price action, there's psychology within every bar, within a hammer, within an engulfer. The psychology is there because markets are made up of people. Like you and me. Markets are made up of individuals. And individuals have a memory. Like they say that the same markets have a memory. So you see things happening time and time again. But at the moment with this SPX, and also added on to that technical point, is when I was doing my back testing. And if you don't know what back testing is, you use a software to test your certain strategy. So my breakout retest strategy, you can test it on real previous data to find if it works. Now, when I was testing that strategy, I didn't know what was going on in the market from a risk sentiment wise in 2016, January, when I took a trade. And so why would I then come into the market and have a fundamental bias when I had such good results on that back test? Anyway, I digest. So, the main thing I'm saying right now is I don't really like the SPX. There's no real flow. You can see on this 4-hour possible head and shoulders here, broken through this level, retesting that level, slight rejection here on this 4-hour candle. And, my interim bias is it does get up to this level. And I would need it to digest and basically making it a little bit nicer as time goes on. For me to be able, once this level breaks, to be confident in that risk on bias and you know, buying those commodity currencies against the risk-off currencies, which you would expect the yen and the Swiss and the dollar to be weak, the Aussie, the CAD and the Kiwi to be strong. So in order to putting factors in your favor, in order to get giving you the best chance of a profitable trade, you want to stack those biases. You know, not bias is probably the word. You want to stack the what am I trying to say? I've lost the word. Stack the odds in your favor. That's what I'm trying to say. And by making this, you might just have to be a little patient. By making this a bit healthier, you can be more confident in that SPX moving. In which case, you'll be looking at selling those risk-off currencies. Now today, and really the past week or two, there's not been much because of where the SPX is, because of where the market is. So there's no flow, and sometimes there's no flow. There's you know, if there's not a setup there, you don't have to take a trade. You just come away. Use the time to learn. Use the time to backtest. Markets trend 30% of the time. They range 70% of the time. Now again, if I bring it back to the Swiss yen and kind of expand on what I mean there, this one bar had a slight rejection. It's looking okay. This big bar, right? Big movement, and then look what we've got. We've probably got 2-3 days of price action in between. So there you got slight ranging market. It's not really a trending market, but it is a proper bullish bar. Not comparison to here, you know, proper trending here. But we got one bar and then we're digesting it for a while. Now like I said, I still like this, and I think this will go up, but we'll have to wait and see. Give you an update next time. The other trades I was looking at today, NZD-JPY is looking okay on the daily. I couldn't take this as a breakout. I was looking at it on account of this head and shoulders pattern. Nice corrective prior to a break. Now I like chart patterns. Now within chart patterns, there was a study conducted. If you traded every single chart pattern, every time you saw it, you would come out losing money. And I agree with that. You know, I agree that if you use these chart patterns every single time you see them, you won't make money. I like chart patterns in the right context, and that's the most important part. Where you see those chart patterns is the most important. So I don't trade chart patterns anyway, by the way. I use them as confluence to my trading. But if I've got a, you know, let's say we had a standstill push to the upside in a certain currency pair, and we've got a channel like this, there's no way I'm going to play that long, because look at this massive push. You've got to have time to digest that move. So if you have a little channel here, you know, I can't bring myself to go long here when we've just had this. You're getting in at the end of the move. You know, you're buying Bitcoin at $65,000 or whatever it got to, the high. Not that that was unhealthy. Maybe to the 2017 rise up to 20K is a better example. So having a chart pattern like this, a wedge channel, just prior to a level, is something that I like to see. And we've pushed on here, and what I'm looking for is a breakout retest of this area to move forward. So NZD-JPY I kind of like. Might take a few days to set up. Another one I like is UK 100. I was looking at this morning. I think this is getting a little bit messy for me. Now, it is a 30-minute or 1 hour setup, so I'm looking for the breakout retest, not the breakout. The UK 100 on a higher time frames is in an uptrend, so we're going with the trend. The 4 hour looks a little bit messier, I have to say, but possibly it's part of a kind of big wedge here. I did have a nice trade on the UK 100 some time ago on account with this. You know, the context I like for a breakout, as I said, one of them's a cup with handle, but I prefer a cup with handle within a cup with handle. So 1, 2, 3. And I took this trade here. Stop loss was under there. TP1, which is always at 1-to-1 risk reward area, was taken here, and we just trailed it up here and got taken out up there. So that was this is a really nice setup for me. And when I took that trade, I just thought that's going to be a winner. I'm going to make money on that. And there's trades that I just feel that way. I just feel like, okay, that is going to be a winner. But the UK 100 here is getting, as we can see, a little bit messy. V reversal is another. V reversal is a context I like. So we've got a resistance area. I like to see price action like this. and then possibly getting a corrective or a possible head and shoulders after that V reversal to digest this impulse to the upside for a breakout long, for taking the breakout in the 4 hour or daily, or a retest on the 30 minute or the 1 hour. And you can see a slight V reversal here, good corrective that has digested this move, and I wanted a push up to this area. It's gone a bit volatile today, it seems. Certainly with that candle and a lot of volume, there must be news out. But I'm wanting to see this now probably reset up, because this is now too much for me to kind of think about trading. I've got to let it reset up and possibly take that long. But at the moment, you've kind of got to let things go, and if you're not quite happy with it, then don't take it. Pound Swiss was another one I was looking to the downside, but again, this was looking nice. You can see this big V reversal here, followed by another one, followed by a third one. Good digestion here prior to, again, looking at this resistance area. I was looking for a breakthrough this morning. I am based in the UAE, so I scan the markets about 7 a.m. London time, and I trade the London session. So obviously, this is invalid again. I'm not going to take that trade for obvious reasons. And this is where, people probably looking at this thinking, this area is held 5 times. I'm going to place my buy order here and look to play that long. However, the 4 hour at that point in time looked nice. There was bearish engulfer, bearish engulfer, bearish engulfer. It looked to be respecting that 20 as well and moving on a downtrend. But possibly this is shifting now. Shifting momentum to the upside. In which case, the daily is on, because we've got this cup with handle followed by a possible ABC corrective. Now, ABC for me is my favorite type of corrective. Complex corrective, they've called. Which, as I've shown there, is if you've got a push up, A, B, C, and then a continuation of the trend. The reason why I like it is, if you think that manipulation happens in the market, now I'm not going to say whether it does or doesn't. If you believe it, let me know in the comments below, or if you don't believe it, but you find that a lot of stops, let's see if this is an uptrending market, a lot of traders may enter the market at this area, right, in the thoughts that this is trend continuation, the swing has been formed, or the corrective is complete and it's about to move on. And what happens is you get another push, but then you get the market drop to roughly around where those stops are. So how many of you have experienced getting stopped out and then the market goes in direction that your trade was in? It's frustrating, right? It's annoying. And that's why I like the ABC, because it sounds bad to say, but I like to see stop locations taken out and then the market push. So for me, it's ready for the big boys, the institutions, to push that market on. And I like to see, certainly for a breakout retest, if this was a broken area, a catalyst here, a simple chart pattern, a hammer, morning star, evening star, engulfer, etc. as my catalyst on high volume. That's how I trade the breakout retest. So I'd have an ABC or a possibly steady state or a steady state corrective, but I always have to see a catalyst as my entry into a trade. Finally, we had pound CAD to the upside on the 4 hour. CAD has been strong recently. CAD has been strong for a while, probably the strongest on the basket for the past couple of weeks. But possibly that strength is coming to an end. So for this, we had a cup with handle, failed. Okay, so now I have to take this pattern from here, because this is now irrelevant. If I'd saw that and I got another cup with handle within a cup with handle I've talked about, I probably might have been able to take that trade long, but the problem at that point in time was this 200. So I don't want to see a 200 in my way, because you get dynamic resistance and you get resistance off of that moving average, because it's a powerful moving average, the 200. And now I'm looking at this area in particular. So we've got a cup and what looks to be quite similar to Swiss yen before the break, a wedging structure, corrective, etc. before this break, where I would prefer to see another reload. If I zoom in, I would prefer to see, you can see that better there, if this decide to push up, I would want another reload, let that 20 period, because the 20 period is a little bit away, catch up. I don't like to take trades where this 20 period, which I use as a kind of visual guide to make sure things aren't extended when I'm taking them. You want to get in at the start of the move. You don't want to get in the end. And I use that 20 period, a very simple 20 period moving average, to figure out when moves are starting. You know, and it actually, this 20 period changed my whole trading around. And it's so true, because before I was taking trades, so if this moved up quite substantially here, and the 20 period is just around here, I might have taken that breakout anyway. But look at this gap. It just, these gaps, or these kind of extensions, don't normally last. You know, you probably, if you did get a break, you might get a fake out. And this 20 period allows me to avoid those dreaded fake outs, because fake outs happen more often than not. And I'm actually developing a fake out strategy, which involves climactic moves. So climactic moves are moves that look like this, right? They move up like that, which is unsustainable. And again, I was linking it to Bitcoin in 2017. That is exactly what Bitcoin looked like as a chart in 2017. And what happened? Bang, Bitcoin snapped back. Now, obviously, that's irrelevant. I'm just using it as an example. But these climactic moves, if they break through a level, I'm looking to develop a strategy right now that gets me into these fake outs, and you can make a lot of money from them, or a lot of risk return. But with this pound CAD, as I digest, I'm looking for another reload in, let that 200 kind of keep continuing to come down, so the breakout is above that 200, and you have that as an area again of support to your trade. So you're stacking those odds in your favor. You're giving yourself another barrier to your stop, which will likely be roughly down here, to take that trade long. And I find that being more selective, you know, has also turned my trading around. I was probably before trading too many positions. And you think that being more selective allows me to increase my risk. So before, where I could only, Othmar, how you doing, mate? You okay? Good to see you. Thanks for joining. Before, I would be risking 1% on a trade, but I would be taking too many trades. Now I get between 5 to 15 trades per month, but I'm allowed to risk 2% on it. So if I make 5 trades, the likelihood is, because my win rate's quite good, it's around 60% usually on a good month. Right now on this month it's up about the 70% because I've won quite a few. And actually I'll show you my month right now. This is my May that I've had. So you can see I've taken 1, 2, 3, 4, 5, 6, 7, 8, 9. Wait, I can't even count. 1, 2, 3, 5, 6, 7, 8, 9 trades. One loser, so I've won 8. USD ZAR was typical how these things work. So the trade before I started this $200,000 funded account was USD ZAR, and it won. So it'd be ironic, again, like I say, normally when I start these challenges, I lose the first trade. I don't know why it is, but it just happens to happen like that. And my previous $200,000, the first one I did, came before this run. So this run here was 10% equity gain, so I technically would have passed it. But it came, again, as I started my last 200, after losing 4 trades in a row, which is the worst drawdown I had for months. So I'm just thinking, geez, give me a break here. Can I just start on a nice winning trade? But anyway, it's the law of large numbers, as they say. But it's been a great month so far. And, 9%, you've got to be happy with that. And what I always tell my members is, you've got to think about having a $300,000 funded account. Don't trade off your own money. You got to think about having that $300,000 account. And even if you don't earn 9%, obviously that's not going to happen every month. But if you get your 3% off that $300,000 funded account, once you learn how to trade, which actually costs you nothing because they return the money back to you, that's $9,000 minus their cut. And as a passive income, if for me, clicking the buttons 5 to 15 times a month, it's great, is it? That's what trading is. It's not what you see in the movies. It's not clicking buttons all the time. It's the complete opposite. Good trading is boring trading, and it gives you the time to do other things. So being more selective about your trading, allows you to increase your risk, and also helps with the psychology. Because as you know, if you are trading is 70% psychology. I would probably say it's 80%, 85% psychology, and then 30 or less percent strategy. The strategy can be taught. I have a big trading academy on the website that teaches strategy, but psychology is the most difficult to overcome. There's no doubt about it. Anyway, I'll actually show you before I come off. I'll show you that USD ZAR trade, which I am in my real account, but not in this one. And hopefully, the next time we stream. So I took this as a breakout on a 4-hour head and shoulders pattern. Very simple to learn, very simple to see. I wouldn't have taken this if this had broken straight away. Because as I said, accumulation. No, I'm going to do them 3 times a week, Othmar. 3 times a week because I stream twice a day on the website, so I can't really, I don't have the time basically to do it, but I'm going to do 3 times a week as I can now. This is my first stream, Othmar. This is the first one I've ever done. So, yeah, we'll be doing a lot more, but I think they're going to be on Monday, Wednesday, and Fridays. I'm going to be doing streams on this 200 grand kind of process and looking at the market. But this setup came on this head and shoulders. Like I said, I wouldn't have taken the break because I always like to see accumulation prior to the break of this level. So we hit here on the 4-hour chart, 4, 8, 12, 16 hours of price action. Now, for me, we were knocking on the door of this resistance area time and time again, right? And the fact that this doesn't rebound here gave me an indication that these buyers were were losing control of this resistance or support area, And this accumulation allowed that 20 period to catch up. And at that point in time, I'm like, okay, I'm happy to take that breakout there. We had a breakout on high volume. My stop was at this area. Previously, my stop would have been too tight, so it would have been too here, and you would have been out of that trade before you experienced this. So giving your trade room to move, again, is very important. I know the risk reward, if you win a trade, you make a lot of money, is better. But winning more trades feels a lot better, and getting that equity or the returns coming in consistently, psychologically, helps massively. You know, if you think about the month I've had now, how good does that feel? It doesn't matter if I've not won big. You know, I've won 6 trades or 7 trades now out of 8. For me, great. I'd rather do that than have one big trade and lose 4 of the next ones, you know, or 5 or 6 or 7. It just keeps it ticking over, does it? It keeps it ticking over, and you end up with a good return. So USD ZAR, I kind of had a corrective here after. I wasn't worried because the stock was here. And then boom, went down. So I hit my TP1. I always hit TP1 at 1-to-1 risk reward. So I take 2 trades, one at 50%, 2 trades at 50% value. So if I'm placing a trade of 10 lots, let's say, I've got 2 trades of 5 lots, and I always put my TP1 on the first trade at 1-to-1. Take my money, take 0.5 R. The market's giving you money. It's actually giving you money at that point in time, so take it. It's paying you. How many times have you tried to get too much out of it and you end up getting nothing, or you end up getting stopped? You know, pay yourself when the market gives you it. Heard the saying, go for the home run, but take a single. There you go. And just keep chugging away at those profits. And I personally, this is what I personally believe is the best way to trade. So USD ZAR is a nice trade that I've got on my other one. And yeah, I think that's really it for today. I'm not going to go into any more and go on too long. Let's have a quick back look at Swiss yen. And I'll come back on and have an update on here. It looks possibly like the Swiss yen is getting a doji candle here on the 1 hour. So maybe it was a volatility spike to the downside. If we look at where stop locations are, you know, do you think there's possibly stops here? Do you think there's possibly stops here? Maybe they've been taken out. But Swiss yen I like. So here we are. I'm going to be completely transparent with everyone. My first trade. I can show this. So you can see here I've got balance is 200,000 because it's, you know, first trade is made. Equity right now is this Swiss yen trade 199355. Current profit is minus 644, and but I take 2%, so this is technically a $4,000 trade. and let's see if this moves. So I'm not worried right now, just because it's a little bit offside. I'm not worried about this when there's $4,000 on it and my stop is all the way down here. Long way to go. So hopefully when I see you next time, we'll go over. I might have maybe won another trade. I will do a stream tomorrow at, I think tomorrow at 2 o'clock or 1 o'clock. Just if you subscribe to the channel, you'll find the schedule. But I'll do another one tomorrow afternoon. I'm based in the UAE, so it's GST time. Anyway, thanks for watching. I appreciate it, and I'll see you guys. If you've got any questions, let me know, by the way. I can answer any questions you have, whether it's on the FTMO, whether it's on trading or anything, and let me know, and I'll answer them. If not, then I'll see you all tomorrow. Please subscribe. As I said, I'm a new YouTuber. I'm not a new trader, but I'm a new YouTuber, and so you'll know when next time I stream. Thanks everyone. Take care and trade safe.